Welcome to Sectors Up Close. I'm Elena Casas. Today we're focusing on real estate investment trusts, or REITs, and my guest is Amy Kong, CIO of Barratt Asset Management. The real estate sector has seen a wildly divergent set of results over the last 2 years. REITs invested in the types of buildings hardest hit by the pandemic, including shopping malls and hotels, saw sharp price collapses and have been forced to suspend or cut their dividends. On the other hand, America's booming housing rental market, driven by a nationwide shortage of homes and soaring demand from families in search of more space during the pandemic, means single-family housing REITs have all increased their dividends since 2019. Income from tenants is also soaring. Average rent for a new apartment lease in New York City has risen 33% in a year. Real estate trusts have had a choppy start to the year, though. The sector is down 17% year to date and 7.5% just in the last month. That's below the performance of the overall S&P 500. Smaller caps have suffered most, while the biggest players in this space include data center owner American Tower, logistics real estate specialist Prologix, Crown Castle International, and mall owner Realty Income. Well, to take a look into the future for REITs, I'm joined now by Amy Kong of Barratt Asset Management. Amy, hi. As I was saying, the different subsectors of REITs have had wildly different experiences during the pandemic. So where do you think the good bets are in this space?
Hi, Elena. Thanks for having me. You're absolutely right. Just by looking at the entire sector, it's really hard to digest the entire group. We are looking at mortgage REITs versus equity REITs and really looking under the hood in terms of what types of equity REITs might make sense. To your question, we are probably shying away from the REITs that don't have as much opportunities to reprice their leases given the inflationary environment. And we're also more keen towards REITs that can benefit from longer term megatrends. So infrastructure REITs look really good to us. I know that they have sold off quite a bit in the past month, but we do think that there is a megatrend behind them, whether it's data centers, AI, or even where we are in the 5G cycle. So we tend to stay a little bit more towards those particular REITs if you really had to dissect within the group.
In a broader sense, REITs are seen as an inflation hedge, aren't they? So why aren't they outpacing the rest of the market now?
It's a great question. I think there are a couple of dynamics in play here. First of all, the bond yields have moved quite a bit, as we all know it in this year. And so you really are, looking at bond yield. Let's use the 10-year as an example, now hovering above that 3% mark. It is now pretty much on par with what REIT yields are providing. And so, from a general sense, maybe there is a little bit of a capital flow from REITs more towards the bond side of things. However, I think in general, I think the outlook for REITs still look pretty good to us. I think in general, when you look at a moderate inflationary environment, which is likely what we're going to be in the next year or even couple of years, REITs have been, historically speaking, have been able to offset that higher inflation. And where we're finding a little bit of a difference is, for example, if you're buying a bond today at 3%, that's locked in for 10 years. You're not going to be able to really reach any point within that 10 years, but REITs do offer that perk, if you would, depending on what kind of REIT you're looking at. If it's a shorter lease type REIT where it's like apartment building, those leases can be reset every 1 to 2 years. Even longer term leases, like in office buildings, for example, there's typically price escalators built in there. And so I think, in general, the REITs market still provides that opportunity to reset and still, again, keep pace with inflation. So we still like REITs in the long run.
In terms of strategy then, how should investors be approaching the REIT space?
There's a couple of ways to it. Certainly the mortgage REITs versus the equity REITs is one decision point, if you would. We're shying away from the mortgage REITs at the moment because a lot of them, as you are probably aware, are being priced at fixed rates, and obviously mortgage rates have moved quite a bit, so they're likely to be less attractive from today's standpoint. Equity REITs, I think you can dissect it from the standpoint of cyclical REITs. We are starting to see lodging REITs, hotel REITs, if you would, pick up a little bit of momentum. Perhaps regional malls or shopping malls in general might pick up more momentum as America returns back to normal, if you would. What we tend to focus more on is, as I've mentioned, REITs that have a longer term mega trend or some kind of dynamic happening from a very long-term standpoint. And we've mentioned 5G as one example, but I think data centers could be an interesting play as well, just given AI and just the big data trend is another one that I'd keep track of. I think apartment REITs are somewhat attractive to an extent just because they have the opportunity to reset leases on a 1 to 2 year basis. And certainly as one thinks about inflationary concerns over the next several years, that obviously could be one way of hedging against a higher inflationary environment.
Thanks so much for that, Amy Kong, CIO of Barratt Asset Management. Well, before I go, here are some of the stories we're following in this space. Existing home sales in the US are forecast to fall to a 2-year low of 5.65 million when April's figures come out on Thursday as house prices race to a record high and the fixed 30-year mortgage rate hit 5%. The housing market remains very hot. Houses sold in March typically stayed on the market for only 17 days as the supply of available homes fails to keep up with demand. Soaring inflation doesn't yet seem to be taking a bite out of Americans' spending. Retail sales rose strongly in April amid an improvement in supply chain problems. Sales advanced 0.9%. That number is mostly goods and is not adjusted for inflation, which increased 8.3% year-on-year in April. And Home Depot has reported the highest first quarter sales in the company's history. It had been expected to report a loss amid concerns higher mortgage rates and prices were making customers wary of investing in their homes. It has instead beaten all expectations and raised its outlook. And that's your roundup of the REIT sector. I'm Elena Casas, and this is Reuters.